All right, welcome to the eCom Growth Show. I'm your host, Danan Coleman, and this is sponsored by TraceFuse. And with me, I've got Tyler Jeffcoat. I'm going to let him do an intro. Him and I are buddies, so you may hear a little bit of banter back and forth, but that's perfectly okay with me. I like to have a light podcast. So, Tyler, why don't you tell us who the heck are you, buddy?
Yeah, Dana, thanks for having me here on the show today. Love being here. Tyler
Yeah,
Jeffcoat. So the day job, guys, is I own a company called Seller Accountant. We're doing bookkeeping, fractional CFO for e-commerce brands. Been doing that for 6-7 years now. Prior
man.
to that, I sold a healthcare company with about 100 employees. And
Oh, that's all, huh?
I'm an accountant, but I rather talk strategy. I rather talk profitability. And yeah, buddy, glad to be on the show with you today, man.
Yeah, cool. Well, thanks for giving me the benefit of the doubt, since this is episode 2. All right. Well, I think what I'd like to do is basically let's just dive straight in to the questions and let's just kind of go from there. So question number 1 is, what are the biggest, and this is probably a long conversation in and of itself, but what are the biggest accounting mistakes that Amazon sellers make?
I think the number one mistake, and I've made this myself, is just opting out of doing accounting. Right? I'm going to be honest.
Guilty as charged.
Dude, listen, guilty, and I'm an accountant, right? Like I started my
Yeah.
first company, at the end of 2012, and guys, I'm an accountant with an MBA in finance, and I didn't do my own damn accounting for the first 6 months. I don't feel good about that, right? That's not something I wear as a badge of honor. But when you're trying to find a path to profit, you're trying to get your business started. There's just so many other things that can distract you. At some point, this thing has to become a business and not a hobby, Dane. And I think the biggest mistake Amazon sellers make is maybe they have 50K a month in revenue all of a sudden, and they're still not keeping an eye on their numbers. I
Yeah.
would say that's the biggest issue. And the reason this is such a big issue, Dane, is that you and I, along with all of our entrepreneurial brethren out there, we are very optimistic. And if our numbers don't tell us truth in a way that we have to listen to them, this is what I do. I don't know about you, but I'm like, well, it's probably just noise in the numbers. It'll get better next month. I'm probably really making money. Has that ever happened to you?
Yeah. Oh, for sure. So, you know that old adage, the numbers don't lie. Well,
Right.
I dare say most people don't even know their numbers. So
That's right.
what I did, my big mistakes is when I was just making money hand over fist. This is the early days of Amazon where that was super easy. I was spending like a millionaire. And I was just trying to coin a smart term, which is not going to sound smart at all, I don't think. But I was spending money like a revenue. No, it's not going to work. But basically, spending like a millionaire, which revenue, sure, net profit, nah,
Right.
no. So that was a big mistake of mine. Is I was looking, hey, look at the dollars coming in, right? But that's not your money,
That's right. Well, and the problem is you kind of ignore like, oh my gosh, I got to send a $25,000 wire out next week to buy that next load of inventory.
Yes.
I wish I hadn't bought that that new Xbox because NCAA 25 came out and I'm ready to play some football. Let's just go. Like, and so I think that's
Well,
you
look,
took it go ahead.
yeah, I mean, I'm with you on that, but I think Xbox is probably a low dollar thing, right? It's more like I wish I didn't take that $20,000 vacation.
Yeah, it's a good point. Yeah, maybe it was the Porsche. I don't know. I don't know what the issue
Yeah,
was, but
yeah,
yeah, the thing. So, but
yeah.
you even if you decide to do your accounting, I would say the next layer of mistake. Okay, you know what? You've opted in to accounting, but
Hmm.
maybe you just take that Amazon deposit and just bloop book it as sales every 2 weeks into your QuickBooks system. That's a really great way to ignore all of the million fees that Amazon is
Yeah,
charging us
yeah,
when we run our businesses.
yeah,
Please don't do that, right? I mean, I don't know if you've ever seen that, Dana, but that is a way to just not know what's really happening in your Amazon business.
yeah. I mean, I'll do you one worse. We didn't even do that. We just looked at the bank account.
There we go.
Yeah, that's, and I don't know if it's that way so much today. I would say that from the days that I got started in Amazon sellers have become far, far more sophisticated, knowledgeable, and having a far better duplication of what it takes to run a business, and
Yep.
with the understanding that it is a business and not just a cash, a cash faucet,
Yep.
let's say.
Well, and that's kind of like any market. I mean, you think about it, if any of you guys listening to this were in the Amazon game 12 years ago, you just kind of made money because you
Yeah.
posted products, right? You were
Yeah,
such an
exactly.
early mover. And so to
Yep.
your point, as the market has gotten more mature, guess what? The guys that aren't managing their business professionally have tended to wash out.
Yes.
And so we're
Yeah.
left with, unfortunately for you and me, by the way, that means we're left with some really smart competitors. And if we're not on our A game, guess what? They are, and they're going to try to put us out of business.
Yeah. So let's kind of, I'd like to just dive a little bit into where can we find profits that we're accidentally spending. And I'll just throw a few out there. Let's say, you ever heard of Tariff Terminator, Tyler?
I have heard of it. I haven't used it. Is it a pretty good tool?
Yeah. So Tariff Terminator, what they do is you get your product, you send it to them. They've got like a nominal fee to research the best possible tariff code for your product.
Wow. Nice.
And something about 60% of the customers that come through them are paying too much money. That means that on every container, on every unit, they are overpaying. And they have saved people literally hundreds of thousands of dollars just in tariffs by finding the correct tariff code. That's profit, right? Straight profit. You have running finances, just like what you do. You don't think of finances as being as important until you make that mistake where you go, oh, I owe the IRS 150 grand. Hang on, I thought it was 15 grand. Where'd that extra decimal come in? That extra zero, I mean. So that's another thing that I've done. And I had many, many years ago, I had a bookkeeper where they said, yeah, I can, no problem. They were my personal bookkeeper. This is my early days, right? And they go, yeah, I can do corporate taxes. And I can't remember what the number was, but it was like 10 to 15 times more than I thought it should be. Wow. And let's just say that my income was 100,000. It was like 40 grand or something like that I owed. Ouch. Like it was 40 or 60%. It must have been more than 44% because I knew it couldn't possibly be that high. Right. And I reached out to my bookkeeper and said, what is this? And like, that's what you owe. I'm like, this is, let's just call it 50%, right? This is 50% of my revenue. That's not possible. I have write-offs. I have inventory, blah, 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 blah. So I went over to her house, if that tells you anything, her house, not her office. And we went line by line. I'm like, why is this field empty? And she goes, oh, whoops, I must have forgot to put that in there. Oh, boom, 9%. So,
I mean, yeah, so you're talking about like things that leak profit. And by the way, leaking cash flow is just as horrible. So
yeah,
we love making money as e-commerce sellers. But if we make money and we're not capturing those expenses, kind of as you alluded to there, Dana, we actually end up overstating our profit, as you mentioned. And why does it feel like I'm paying almost all of my revenue to the IRS? It may be that I just don't have, because it's actually another reason to have decent bookkeeping is like you would think that like, I don't know, bookkeeping would make you have to pay more taxes, but actually most entrepreneurs are really honest people and they don't have the confidence to write off their deductions unless it's in a clean bookkeeping system where they could, pass an audit if they had to here in a couple of years.
Yeah.
So I just think another reason to have your ducks in a row for sure.
Yeah, exactly. Let's take a somewhat, I think probably a lesser known example of this. Let's say you use your car to bring your inventory every single day to UPS or whatever, right? A lot of people don't know that if you buy a vehicle that's 6,000 pounds or more, you can write that whole thing off over the course of either 1 year or amortize it over 3 years or something like that, or 5 years, something like that. So you can buy a vehicle, $100,000 vehicle, nice Suburban, whatever you want, and through the business, as long as you are primarily, hey, don't listen. I'm not giving you financial advice, everybody, just so you know. This is just my understanding. But as long as you're primarily using that vehicle for business purposes, meaning 51% or more is my understanding, then you can write that vehicle off as a business expense. And that helps decrease the amount of income that you have to claim, which could conceivably put you into a lower tax bracket. Am I right on this, Jeff?
No, I think you're right. And again, neither of us actually file taxes for you, but I agree that I think what I'm hearing from you, though, Dana, is it's okay. As operators, we have got to professionalize and make more money. But then as investors in our companies, we have to make sure we have the right attorney when we need one, and the right CPA when we need one. We got to make sure we
Yeah.
have the right team around us, because if
Yeah.
not, we'll get, honestly, my dad used to call it kind of the stupid tax, right? Like if you realize, oh, dang it, I paid that money. If I'd
Yeah.
have just known that I could depreciate the entire truck, but I didn't know. And so
Yeah.
the things that you don't know tend to be the things that cost you five figures of your hard-earned money every year. And so just investing in your own education, make sure you trust your team. I don't want an accounting team that looks at my stuff once a year for 5 minutes to file my taxes. I want to make sure that
Yeah.
I've got real partners in my corner that can help me. In fact, I had a meeting with a client today where I don't even file his taxes. And I'm like, hey, buddy, you've had a good year. Can we talk about putting aside some cash? And it was a really good thing I did. He was about to go buy a beach house, right? He actually ended up needing to put about $250K aside just in a high yield savings account so that he could make sure he doesn't have the gotcha pop
Yep.
up when he gets to file his taxes here in a couple months.
Boy, I wish I'd done that many years ago. We do that now, but yeah, that's a perfect example. So, your dad calls it the stupid tax. In our in our industry, I would call it the negligence, or probably negligence, or just not knowing, right? That's mostly where it is. I think that we all, as e-commerce sellers, don't want to pay for things we don't have to pay for if it's some kind of fee or tax, right? None of us want to do that. So
Agreed.
knowing what's available to you, and like, for instance, my wife and I, we challenge our CPA, right? Hey, can we, what about this? What about this credit? What about this deduction? What about this? Right? Because even as a CPA, their job isn't necessarily to optimize. It isn't necessarily to optimize and know all of the tax loopholes.
Right.
So sometimes you have to ask them, and they'll have to go look, right? So we challenge ours, like, hey, I got haircuts. Can I gotta look fresh. Don't worry about the fact that I always wear a hat on the podcast, but can I write that off? And unfortunately, at this point, the answer is no. But but you would never know. Can I run a haircut as a business expense? Can I buy my food as a business expense? And there's a degree of these things that you can, in fact, write that off. And all of those things, you just a couple thousand here, a few thousand there, just you lower your taxable income.
Right.
So cool. All right, let's go on to the next question. I know the answer to this, and I think most people do just by gut feeling. But how have profit margins on Amazon changed over the last year? Let's call it the last few years. And what are you keeping an eye on for your clients?
Yeah, so obviously we laugh because clearly there's been some compression. I got off a call with a CFO client earlier today, Danan, who running the same business, in fact, doing it better this year than he was doing it last year. And where he was getting 20% last year after Amazon fees and after cost of goods sold and advertising, kind of the real contribution margin or gross profit, he's getting like 17.5% this year. And two main factors contribute to that kind of shrinkage of profitability. One of them is the new placement fees and additional logistics noise, a lot of it related to Amazon.
Yep.
And the second one is we've just seen a lot of just increased tacos. That's kind of total advertising budgets, because our competitors are getting aggressive. They want to blow through their inventory just like we do. And so those actual keyword bids are have been heading in the wrong direction. Now, I will say this is kind of a natural outflow of, if the market is soft, just meaning there's less eyeballs, then your competitors are all going to be feverishly trying to, I don't know. Have you ever been to a conference, Danan, where you realize that it's like all vendors? You're like, where's the actual customers here? And so you have one poor ass customer walks down the aisle and gets pounced on by 25 sales guys.
Yeah.
It's like that it's like that with ads. If there's not as many customers, we're going to pay more for those ads.
Yeah.
Thankfully, I'm not sure what you're seeing here, Danan, but over the last 6 to 9 weeks, we're starting to see it get a little bit better in most categories, and that's encouraging.
Yeah, I have to be honest with you. I actually don't track our Amazon sales. My wife is the one that handles all that stuff. I have seen this year a general increase in sales. Now we sell supplements, so overall, we've probably, if I had to put a number on it, I'd guess 20, 30% maybe. But, we have a super unique situation. We don't run ads. We get the inventory on consignment. We have a direct relationship with the brand owners because it's not private label. We get exclusivity to this brand. So, we've got some unique situations here that help us not have to worry at all. We don't have to hold inventory. We don't even pay for it. We just pay them once a month for what's sold, and we just tell them this is how many units we have. So that situation is unique to that degree. But I think that, well, let's switch back to the main subject here. But, our profits overall, I think since we started, I think our fees are roughly 4 times what they were in terms of what we pay Amazon. Not necessarily what we pay for inventory, but our inventory costs have definitely gone up. And so and we've lost some products, we've added some products and stuff like that. Whereas we used to make in the early days, it was a 64% net profit margin. 64%. We made $250,000. We took home nearly $250,000. You know what I mean? And, and that, I think our profit is down to about 12% today.
Yeah.
So
that feels like that's pretty typical. I feel like that's probably what I'm seeing across the board. And just maybe because I would imagine somebody listening to this might be asking, to Danan and Tyler, I get it. What would be a good profit margin? And let me just give you a quick anecdote on that because I look at this data a lot. So if you sell a product, you've got your Amazon fees, you've got your product cost of goods sold, you've got your advertising, and then you have storage, like those kind of loadable cost of goods sold kind of expenses. Refunds will be a part of that, of course, as well.
Yeah.
If you aren't able to keep at least 20% profit margin on your products, gross profit, obviously you may have some software and contractors and whatnot below the line.
Yeah.
But if you're not able to keep 20%, it means that your product is in kind of a stressed situation. You don't need a whole lot to go wrong for you to kind of feel a little bit of pain, right?
Okay. So I always thought that number was between 10, well, it was about 15. So you're saying it's 20.
Well, let me tell you why yours is different. I mean, I don't know if you guys were listening to what Danan just said a minute ago, but if I have zero advertising expense and I'm having my supplier consign the product to me, that means the amount of working capital that I have tied up in this product is close to zero.
Yeah.
And so guess what? If I could have, by the way, this is how Walmart makes money. Walmart doesn't pay brands for like 90 days. And so Walmart is making money because they are using your money to fund their inventory. Well, Danan, you've kind of figured out the Walmart Amazon model for a small business. And the result of that is that, guess what? You might be fat and happy with a 15% profit margin because you don't have any risked capital. Your capital risk is so small. Yeah.
Yes, that's absolutely, that's a fair point. So then you would say more along the lines of a private label seller, 20%, because you can be a wholesale seller. And if you're doing volume, 5 to 10%, you might be fat and happy on that too.
And maybe I would replace the word volume with velocity, because I think a lot of it is really not just how big your sales are, but how quickly I can churn that cash. Like if I have wholesale arbitrage clients that still have really bad payment terms where they have to pre-fund the inventory. But if I have that has a situation kind of like you're describing where, oh my God, I don't have to pay him for 60 days. Like that's amazing. I just pay him what I sell in a month. So to your point, we're always trying to compare profitability with the amount that we're having to risk. And that allows us to kind of have an ROI mindset with our business. Yeah.
All right, cool. So that leads well into what advice would you give sellers who are not happy with their margins? So what can we as sellers do? And let me just, I'm kind of answer your question for me for a second here, but there are so many unique opportunities and ideas that you can test and or implement to boost your cash flow, right? Yep. So in the last episode of this, I was on with Carlos Alvarez, and I just wanted to go into, okay, my name's Sally or whatever the lady's name was that I invented. I've got 40 grand, or was it 10,000? But I've got money, I've got time. where do I start? And his first answer actually surprised me. And he said, become an influencer. You've already got everything in your pocket. It's $0 investment. All you have to do is start producing videos and get an account approved. I'm like, dang, that is where I'd start.
Yeah,
you know,
yes.
because yeah. So anyhow, just that was surprising to me. That was a solution I hadn't even considered, because I do actually have semi-influence thing, but we won't get into that. But there's just lots and lots and lots of different creative solutions for this. But I want to hear your creative solutions from someone who's in finance.
Well, and you're kind of talking about like, okay, you might be starting with just a feeling. Like, I just feel sad about my money, right? Maybe I've looked at my bank account.
Sick.
Yeah, I feel sick. I feel like I'm in the fetal position at 2:00 in the morning, hoping that I can make payroll. There's some visceral feeling that we normally have as CEOs. And so step one, if you're trying to improve your margins, is you've got to make sure you have a system for understanding profitability. That obviously is kind of bookkeeping first, but then maybe also like a dashboard to help you understand how each of your ASINs is performing. And the reason you got to do that, Danan, is we kind of got to figure out, where's the leak in the boat? I know there's a leak. I'm capsizing, but where is it? Okay, if it's that my refund rate is double what I would imagine it should be, then it might be that the advice I would give you is to go to your supplier and make sure you don't have any quality issues. Or maybe you go look at those nasty reviews you got when they refunded the product and realize, oh crap, I'm telling them it does this, but it actually only does that, right? There might be low-hanging fruit opportunities to improve it. If I look and I see that I've got 35% of my total budget in advertising, my tacos is just outrageous, then I may need to go to my advertising team and say, guys, what the hell? What are we doing here? Let's unpack this and make sure we're focused.
And even more likely than that is, and I see this a lot with, I don't want to call them unsophisticated brands, but brands that are not Amazon sellers. It is one of their avenues, right? And they're probably doing 3, 4, 5, 10 million a year, but they are not sophisticated Amazon sellers. And so one example of that is, a buddy of mine did an audit on a client's account for PPC, and I was surprised to see that they could save somewhere between 15 and 30K a month in wasted ad spend. You know what that number actually was?
What?
50 grand. 50 grand a month in wasted ad spend. 50 grand. We're talking 600 grand a year here. Now, this goes up, this goes down. Sometimes it's 30, sometimes it's 15, but let's just take an average of 20. It's still 240 grand a year. It's $250,000 a year in wasted ad spend on stuff that's not converting. And that's your profit. That literally could be, there's your income for the year that handles all of your family needs, all of your family wants, maybe not, but $250,000 a year, you can live well on that.
But just to double click on that marketing thing for a minute, because I think you're right. Like, anybody who has ever spent any money on marketing knows that some percentage of what I'm spending is wasted, but sometimes it's kind of hard to know what is working and what's not working. And so to your point, like making sure that your team has good ASIN level analytics, or if your team's not doing a good job, maybe finding a new partner. Because if I could give you the gift of spending whatever, $1,000 a month to identify even a small percentage of your wasted activities each month and eliminate those, to your point, Danan, like whatever that person was paying to discover that 50K in totally bogus ad spend, the ROI was outrageous. You bring up a great point there, because one of the best things you can do to improve profitability is just to try to identify no-brainer areas where you're wasting it. Like, I'll give you an example. Like if your campaigns are set up in a way where you're bidding on absolutely wrong keywords, right? And you're driving traffic at a high cost against a big competitor where you're never going to convert because it's just a bad campaign. Well, we don't have to be real smart. I'm not even an advertising guy. And I can say, well,
neither am I.
Sir, I'm going to say, stop doing that and you will probably make more money.
Or keep more money for sure.
That's right.
Yeah. So I'll tell you just, again, since we're talking about finances, investments and stuff like that, guess how much it cost them to find out that they were wasting at least 30 grand a month? I'll just
how much?
Take a wild guess.
I'm going to guess $2,500. I don't know.
All right, cool. It was $750.
Oh, wow.
$750 to locate that stuff, right? And then they were spending, I think it was somewhere between $7,500 and $8,000 a month to manage those campaigns. So we cut that out and we cut it down to $5,000.
That sounds like a 60x return on investment right there, and I'm all about 60x returns on investment. That's amazing.
Yeah.
Well, there's all sorts of other things you can do to improve profitability. Obviously, raising prices, selling multi-packs, launching new product. But I wanted to ask you, Danan, like you're in the trenches, you and your wife with your supplement brand, and then you support so many brands out there. Like, is there anything else that you guys are kind of seeing as maybe being current in terms of really identifying those leaks in your profit bucket and filling those leaks?
Yeah. So this is this answer will exist forever, right?
Okay.
The better your conversions, the lower your PPC, right? The more money you make, right? And all of that relies upon having a really good listing that is tailored for exactly what that product is. So rather than, in the old days, there was like in certain fields on Amazon in the back end, you could put some keywords in there, but what a lot of, or you can answer a question, but a lot of people didn't know there was enough space for like 5,000 characters. So if you put a whole bunch of spaces in there, you can keyword stuff certain areas and you would start to display for those keywords, right? I don't know any of that black hat stuff any longer. Certainly not, I wouldn't admit it publicly if I did, which I don't. Things, I think that one of the most critical points today, and I think it'll always be this way, is your listing is your foundation. If it's not as good as you can possibly make it, if you haven't taken advantage of every single field in the back end that you're capable of taking charge of and optimizing, if you're not optimizing your images, someone once told me that alt tags in images even are crawled by Google. So an alt tag, by the way, is and meta descriptions, right? So it's a back end. For those that don't know, if you take a screenshot, it's possible to add certain data, written data, so keywords and stuff like that, to the back end of a photo. And that is what Google, it's certainly used to. AI, I'm sure, changes things, but Google would crawl the metadata and the alt tags to figure out what is this image, right? Mm-hmm. And I don't know if it's like this anymore, and I don't know if it ever was, but I'm fairly certain it was. If you didn't have that metadata and those alt tags in your images that you were uploading to Amazon, well, that's a lost opportunity, right? So the foundation, your listing is the foundation. If you've got a really good listing, you then couple that with really good campaigns that are highly relevant to just that listing, even just that variation, well, then it's possible to see extraordinarily high conversion rates, which means you don't necessarily have to pay that suggested bid price. You might pay 20% less and still be getting all the placement and getting all those, all that brand, getting your brand out there because you convert so well. And because you convert so well, Amazon's going to display it because they're making the money on the clicks.
Okay, so another question about conversion. By the way, this is your podcast, not mine, but I recently had you on my podcast, Danan, and one of the discussions we had was a little bit of a double click, and I think what you were just talking about. Like at the end of the day, we can overcomplicate the hell out of this. It's traffic and conversions, and it's like, how do you get there to be more of those two things? And one of the things that really was, I found it kind of shocking, and then I actually had an example. This popped up today, Danan, where you talked about how having like a tax on your reviews, the difference in having like a 4.2 star rating and having like a 3.9, like the level of people are just not going to click through into your listing and they're not going to convert. Bro, I was talking to one of my friends today, one of my clients, and they are dealing with this right now. I actually need to send them to you, but they're dealing with this right now, where all of a sudden their hero product went from 4.3 stars down to like 3.9. That's a big drop. I'm not trying to just tee you up, but like the impact on his profitability is awful, right?
Yeah. So statistically, based on our TraceFuse customers, if you go from a 4.3 to a 4.2, you can lose as much as somewhere between 25 and 50% of your sales revenue. It's a major hit. Now, there's a lot of other factors on this, right? If I'm selling a fat burner and I'm at a 3.9, man, I'm at the top of the market. You know what I mean? Because for people, it either works, they think it works, or it doesn't, and and that pill is the devil. You know what I mean? It's you got 5 stars, you got 1 stars, and not much in between. So, the way I think it works is if you go from a 4.3 to a 4, so if you go from a 4.7 to a 4.6, I think it is, if I remember correctly, sometimes, not always, you can see a significant drop in sales. Go from a 4.3 to a 4.2, most of the time you will see a significant drop in sales. Go from a 3.9 or 3.8 to a 3.7 or a 3.7 to a 3.6, you're now displaying a 3.5 star. You see another drop. And I don't know that Amazon actually enforces it, but the last time I looked, I think if you were sitting at a 3.5 or below, you're not eligible to run ads.
Wow.
But I have heard of people that have a 3.4 that are still able to advertise their product. But in some policy that I read not too long ago, that's what they say about that. So, actually, funnily enough, this brings up a subject that I was on a podcast just before this one with Todd. He's a local seller. He's a wholesale guy. We're doing weekly news. And Amazon apparently is testing not showing reviews at all on the search results. So you don't see star ratings at all. And I don't have any proof of this myself, but I know other people that have seen this. I've asked them for the screenshots, but what they're doing is they're using the velocity of that product. So 500 bought in the last 30 days, right? That you see that in gray text there. And Amazon tags badges for most popular, Amazon's choice, bestseller, stuff like that. I think what they're doing is there's no question what they're doing is they're testing out different ways to show social proof to help to make a buying decision, because they know their reviews are so screwed. Yep. Right. So,
good point.
So, and that kind of leads into today's commercial. Is this episode is brought to you by TraceFuse, so that's why TraceFuse does what it does, is we help Amazon sellers remove negative reviews that don't belong there in the first place. Right. So those are reviews that are breaching terms of service. They're fraudulent reviews. We definitely go after fraud as well. We have a few tricks up our sleeve to locate this stuff and literally locate rings of fraudulent reviewers. But yeah, so removing negative reviews, a single 1 star is roughly the same weight as up to I'm gonna average it out 10 5-stars. So it's actually 12 on larger brands.
Wow.
It was 7 on one brand, and there was another brand that just yesterday. So let's see. I brought this up in the last podcast because I was flabbergasted by this. Mathematically, based on the number of 5 stars and ones and twos, okay, first of all, there was only 1 star and it was written. Okay. There were only 4 3 stars. There was 0 2 stars. And then it was a bunch of 4s and 5s. They had like 24, 25 5 stars, and 24 of them were written. Mathematically speaking, that would be a rating of 4.3, and their rating was 3.5. Why?
Figure.
Doesn't make sense. They had 1 star, but 25 5 stars. So that 1 star effectively 100% killed that listing. Amazing. That was selling. I don't know if it was not, I don't know that it was tens of thousands, but it was 5s of thousands of dollars, right?
Yes.
Gone because that 1 star, because mathematically it just doesn't make sense. So, removing those, and this person is going to be using TraceFuse, and we're going to go after that review because I think it's fraudulent. If we're able to remove that 1 review, boom, listing turned around, you're back up to a 4.5 star or whatever it would be. There you go.
Yeah, I mean, guys, I just want to say this. There are very few opportunities in your business where if you can fix one little tweak, if you could literally just remove this one dent in the car, the value of the car doubles. Like there are
Yeah.
very few things like that. And I will say that if you have been the victim of something predatory or not TOS compliant, like Dana, like you're describing,
Mhm.
wow, like that is, you got to take action on that yesterday because I agree with you. I've seen some of those where I'm like, wow, we don't understand. We used to sell 25 a day. Now we're selling 5 a day. What's going on? What's going on? And, it's just, guys, make sure that part of your checklist, if that happens, because this could happen for other reasons, but like if your volume hits the tank, make sure that one of your checklist items is to make sure no one's attacking you on your reviews
Yep.
and be as proactive as possible to reach out to these guys at Trace Views. I mean, I know they're
Yeah.
sponsoring the
Thanks.
podcast. I'm just trying to
Yeah.
toot their
Thanks
horn,
for the
but I mean,
commercial.
really, yeah. I mean, but literally, like, find me something that gives me that kind of ROI, and I'm all about it.
Yeah.
So
Yeah.
that's big.
Yeah. Yeah. We've definitely had people that we've turned around the whole company to the degree that we were able to remove enough reviews to get them back up to that 4.3 star rating. It's wild. It's wild. Like, yeah. Anyhow, so and thanks for the commercial, buddy. Appreciate it. So I've got another question for you, and this
Okay.
has to do with acquiring money. Rates are up. I think they're coming down a little bit. Have you seen the rates are coming down?
Just a tad. Like we're starting to
To-
see 30-year mortgages peak at the down, and we are
Yeah.
pumped, ladies and gentlemen, because we love lower
Mhm.
interest rates as people
Absolutely.
living in
'Cause-
inventory. Yep.
Yeah, because it means more freer money.
Yes.
Not
Free-ish.
free. So yeah, free-ish money. So Amazon lending's been stripped back. Getting funding is harder. What do you
Right.
have? What advice have you got for, let's call them, I don't know if it's, let's call it sellers that need money to be able to manage their money better?
Yeah. No, I mean, actually, it's a
And
really
there's,
good question. Like, I feel like the most important thing for new entrepreneurs to remember is that every dollar can only do one job at a time. And so I either can grow my business by investing in more inventory, or I can pay down debt, or I can pay mama, I can pay myself, right? Like that kind of thing. And I think we get really stressed out as business owners when we try to have the same dollar do 3 different jobs. We got to pick one at a time. So I can invest my money in inventory to grow and I can harvest the profits. Now, when I get that dollar back, I can choose a new job for it. But I think I really, that's the first thing is that, okay, guess what, guys? We don't get to control interest rates. They're higher now. They were historically low 3 years ago. And that made us feel warm and fuzzy inside because they were like nothing interest rates. Well, they're kind of going to be more normal now. And so we can't be as careless with our planning. I'll give you a concrete example of this. If you're
Okay.
forecasting your Q4, you're trying to get that last PO ironed out for your Q4 inventory, and you are like 4 years ago, you would have guesstimated the highest possible sales that you might make in December, and you would have bought all that inventory because you're like, you know what? I'll just store it for next year. You can't do that anymore. Now you actually have to have a high fidelity forecast where you're looking at, okay, wait a minute, let's look at ACE and ABC. Okay, wait a minute, I'm going to have a
What
10%
can I
increase. Yeah,
can I interrupt
sure.
you and just can you please define a high fidelity? What it means in this case?
It just means something that isn't baloney. Like I don't know how many times
Okay.
you've seen. Actually, I'll give you a personal example. And I don't feel great about this. I'm supposed to be an accountant. I'm a CFO. But have you ever done this where before you launch a business, you kind of build a spreadsheet, and that spreadsheet has
I
like
know exactly what you're gonna say.
last month's numbers. Okay, you know what? Last month was ugly, but when I look at my future months, Dana, on this spreadsheet, it is roses, rainbows, and Porsches all the way into the future. In other words, a lot of times we build our financial plan kind of on like believing our own BS a little bit.
Yes,
And so the opposite of that
I've totally done
is
that.
a high fidelity set of financial forecast and statements where you can be like, I know that my dream is to triple sales. It may only be up by 25% though, like that kind of thing.
Okay, cool. So you're talking about building realistic, being realistic and being, and yeah. Okay, cool. I just want to make sure
Okay to be
for the
aggressive,
listeners that,
you just have to
yeah,
be realistic.
yeah, that's fine. Cool. I want to make sure that for the listeners that there was not some special definition in a high fidelity forecast. So you just,
I just mean it's got to be, it's funny. Back in the day, it was like hi-fi TV just meant high resolution. This is kind of the same thing where it's like, if you're used to looking at your numbers and it's like playing a Nintendo, the old school Nintendo, you need to upgrade to a 4K TV now. Like, I've got to have some precision so that I can really see what and by the way, you're not going to get it perfect. It's okay for these forecasts to still be guesses. They just need to be guesses that are rooted in some kind of reality. And here's the other thing, Danny, I'll say this. When interest rates are high, and they still are right now, we may have to pull the throttle back just a little bit. Instead of going force pedal to the metal, I might have to go pedal to the metal minus 5% so that I can slow down.
In what part of your business?
I would say most importantly, the two parts that you have the most control over are really advertising and inventory, and you're kind of balancing. It's the seesaw. Like, I don't want to stock out, but I don't want to have 6 months of inventory. And my point is that, and another way, by the way, is launching new channels or new SKUs, right? I could say in 2020, let's look at the interest rates right in the middle of the pandemic, Danan. If you were to say, Tyler, should I launch all 10 of my great ideas at the same time? I would probably say, yeah, money's free. Go ahead, try them. But this year, you may have to choose to only launch 5 of those 10 ideas, maybe your 5 best ideas, because you're going to have to tighten up and not do a million things at once. You got to do 5 things and do them great so that you can actually make money.
Okay, cool. And one other thing I'll just throw in there is that this is one of those creative solutions, and this is much more commonly known than it used to be in past years, but you can request terms from your factory. Maybe what you can do is, let's say you're going to have 100 units built, just so I don't embarrass myself with my mathamisms. So let's just say you're going to have 100 units built. You can say, hey, look, can I just pay you for 50 of them? You make the 100 at this price. I'll pay you for 50. You send me 50. And when I'm ready, I'll buy the other 50. And let's call it within 60 days or 90 days or whatever those terms might be. Once you have a couple of orders or maybe you go to China and you develop a relationship on the spot in person, which I'm always in support of, because I believe that you can negotiate better terms in person much more quickly and much more effectively in person than over email and, trying to read and write in China English and stuff like that. So,
if you don't mind, I'll give you a quick case study about that exact thing. A really good friend of mine named Josh.
Yeah, please.
I was just talking to Josh about this last week. He 7-figure seller of kind of camping products, really nice brand, great guy.
My niche.
Was frustrated with his profit margins, was frustrated with that cash cycle. He's like, man, I got to pay these guys way too quickly. And this is what he did. He dusted off his passport, flew to China, drink sake, kiss babies, right? Like, spend a week and a half hanging out with his factories.
Guarantee you he ate things he has no idea what it was.
That's right. But you know what ended up happening? First of all, he went to his factory and the guy was like, oh yeah, by the way, we're sitting on $25,000 of those tops you ordered that we forgot about. And he like paid for his plane ticket and his expenses with one conversation, goes back the second day and is able to get net 60-day terms on payments for his 3 hero SKUs. And then he goes back the third day, goes and has dinner with the owner's family. And next thing you know, he's got a 5 to 10% reduction in his cost of goods sold, because guess what? The Chinese guys want to partner with us. They want to know they can trust us. Right. And so if you're a 7-figure seller of a private label brand and you're manufacturing your product in Asia and you've never tried
anywhere.
That's right. Good point. Yeah, if it's in Florida, by the way, if it's like jean shorts and mullets in Florida, still go sit down with that guy. Go talk to him.
Hey, I don't have a mullet, buddy. I will not claim that I have jean shorts either.
The jorts he can't speak to. The mullet he can confirm. We are no mullet on Friday. I love it.
That's right. I'm gonna get a mullet for our next podcast.
We got to.
Yeah, let's do it. So what an amazing story. So recovered lost inventory, right?
A lot of it
on day 1. Yep, a lot of it. Number 2 is he got better terms on day 2, and day 3 he got a reduction in price, right? So if that's not more profit for you, I mean, what? I don't know what to tell you, right? Yeah. And it's totally true. Like the manufacturers. So there's always a boss, and then there's the owner, right? And sometimes the boss is the owner, and sometimes not. but the boss, they always want to impress you. So they'll take you to their nicest restaurant that they love and stuff like that. And you just develop a friendship, call it a friendship. You develop a friendship with these people. They are very interested in you meeting their family members, meeting with their employees and stuff like that. Now, here's another thing that can happen. So, and because your buddy, did you say his name was Josh? Did I hear that right?
Yep.
Okay,
Josh.
cool. Yeah. So Josh, what he also could have done, he could do this over email. Again, all of this can be done over email, but we could have done is, what are you working on for tomorrow? Then he gets a jump on the next product that's going to come out. So, if there's a table that's made out of adamantium, right? And it's the toughest table ever. Maybe he gets first dibs on that because you are developing a friendship and a strong relationship with that factory. And they are going to be willing to give you not first right of refusal, but first notification, right? So that's another way to potentially increase your profits is by diversifying your product line. If you're building a brand, by asking that manufacturer, what else are you working on? What's in the pipeline? What do you have going on? Right. So
I would imagine this might apply to supplements, but I something kind of similar to supplements. Another one of my friends, his name's Kyle, and they sold the like 8-ounce bottle, the 16-ounce bottle, the 32-ounce bottle. And they went to the supplier and said, hey, we want to try, we would love, if you're interested, we'd love to pilot the 64-ounce bottle. Let's just see if people will buy it. And so they piloted it and it went really well. And they immediately went back to that supplier and said, hey, listen, we know our competitors are going to want this at some point. Would you be willing to link arms with us? Here's our goal. Here's what we're doing, and make this like 64-ounce exclusive to us. And the supplier was like, we get it. Let's do that. And so the other thing you can consider doing is that these factories tend to make stuff for a lot of your competitors. And if you can do what Danan just said there, get first in line, get the adamantium table first, you can say, hey, could I just be your preferred partner for adamantium tables? Because that would be really awesome. And then we could grow together. And you may be surprised at how reasonable they are.
Yeah. I just want to point out how quickly and with such good pronunciation, you can say adamantium over and over again. It's very impressive.
You know a lot about a guy when you learn that he's wearing jorts, and you know a lot about a guy when you understand his Wolverine vernacular. That's right.
That was just a random thing. Anyhow, we'll move on from comic books. So, all right, let's see. We're coming towards the top of the hour here. What are your thoughts? I got just like one more question and then a couple of parting questions. What are your thoughts on Amazon sellers preparing to sell their business? So I know from my own experience, but also from speaking to many sellers and from speaking to you in the past, give me your gut reaction on when someone says, yeah, I'm a 7-figure seller and I just came up with the idea. Maybe I'll sell my brand. And I can already see the smirk starting to form on your face. I know.
It's great. Like, this year has not been a good year to sell. You guys know this. If you've been feeling out the market at all, this has been a tough year. And yet, and this is what's really exciting and has me kind of jazzed here, Dana, is that I believe 2025 is going to be a really good year. And so
you're not the only person to say that.
Oh, am I the only one to say that?
No, you're not the only person to say that.
Perfect. I was going to say, this is interest rates are going to creep down.
Yeah.
We're going to be beyond the election. There's a lot of things that are going to make the backside probably Q2, Q3 of 2025, and maybe even into Q4. I have a feeling there's going to be a really strategic moment. You and I don't know when that is. We don't know when the multiples are going to creep back up again. Maybe a couple of venture capital firms get involved. Maybe another aggregator pops up. We don't know. What we know is that we can get ready right now. Yeah.
Yeah. Okay, cool. So, and to expand on that, I think we've seen our aggregator heyday, right? You have this huge sweep up and then it comes crashing down. And I believe it's going to equalize, or if it hasn't already, not that I follow this stuff, but I think it's going to kind of equalize into a fair market value, right? But I think that what you may start seeing is some of these larger sellers going and buying up brands that support their existing brand or what they want to start building into the future.
Yep.
So
no, I think we're going to continue to see consolidation, but to your point, it's going to be common sense consolidation. It's going to be strategic. If somebody already knows how to run a monster supplement brand, but you provide some supplements that they don't sell, they might be very strategic in picking you up. I believe you're correct in saying gone are the days that somebody from, whatever, UPenn's MBA program raises $1 million on Wall Street and goes and just buys 17 different categories. It doesn't make any sense. And so we are going to see more intelligent acquisitions, and they're going to be led by great operators, because guess what?
Agreed.
Money is still going to be easy to come by. So if you're a great operator, by the way, this might be some of you guys listening. If you're running a 7 or 8 figure business and you're good at it, don't sell yourself short. Somebody will give you money to go buy complements to bolt onto your business. Just probably not in 2024. Let's wait until 2025 when the markets are a little bit rosier. Yeah.
Okay. So basically you're saying that if you can prove that you know how to make money, someone's a lot more likely to invest in you to help you expand.
I think so. Which, by the way, you and I would just say, duh, that's like it makes sense. But you know what? The reason
when you
we
say it does. Yeah.
Yeah. Like 5 years ago, there was crazy business going on. All of it was insane. Wait a minute, I'll stroke you a check and you get a check and you get a check. But nowadays you actually have to have a track record. And I think that means that if you have a track record and you're willing to grind and kind of really operate your Amazon business, like, don't give up, guys. Like, there's still a ton of money to be made in this space, and there's a lot of exit value coming. We just have to be good. We can't just, oops, I have $1 million business. Like, you're going to have to execute. You're going to have your numbers in order. You're going to have to improve year over year. And I just think 2025 is going to be a good year for that.
Yeah, cool. Well, awesome. Thanks. I appreciate very much, Tyler, all the wisdom that you've dropped here. And I know there's really so much more that we could be going over, like maybe in another episode. And this would be really cool is if we were able to come up with like, call it a start to finish. Where do we find money leakage? What solutions are in place, or what solutions are there that people can find to solve that? And we just go through a list. That would be a pretty sweet episode, I think, if we just like rapid fire all through that stuff.
Love it.
So
let's do it.
Let's think about that in maybe, you know what, maybe the one that we do together. So I think October or November, I think I'll be back on your podcast. Maybe we can do something like that for that.
Sounds cool, man. I'd love to. I'd love to kind of find a case study, kind of unpack it together, kind of almost, see one of these. Because guys, like, listen, everyone has issues. That's the dirty secret. You and me and Dana are going to go to Prosper, and everyone's going to talk about how sexy their sales are. Half of us are struggling, and half of us don't want to talk about it because we're embarrassed. But if you just kind of be honest, be transparent. I blew it last month. I'm going to make my business better. There's just such a path to success in this industry, and humility ends up winning the day. Yeah. Cool. Well, let me come up with a question, kind of a parting question. You are a successful entrepreneur, right? You bless you. You managed 100 employees. What is your secret to your success? And let me kind of direct the answer more towards how do you operate in order to be able to have the successes that you've had? What dogma do you follow, let's say? I would say that the first thing that popped in my mind when you started saying that is a quote from James Clear's book, Atomic Habits. Dana, I love the idea that we really don't rise to the level of our goals as much as we fall to the level of our habits. And so something that's really important to me is to try, you guys think about this, like there are 1 million guys out there that are blessed genetically to be tall, to be big, but there's only one LeBron James. And it's because he falls in love with the process of grinding and training and doing the little things every single day to be elite at his craft. I'm certainly not LeBron James, but with the gifts that I have, my mantra is I'm going to build as many successful elite habits as I can build so that I can kind of overcome my many weaknesses. That was the first thing I thought about. The second thing
I love it.
Is the more that I can become aware of how I'm wired and build my organization around who I am instead of trying to be all things to all people, the better I've become. I'll give you an example of this. I got fired in that company that had 100 employees. I got fired from doing the hiring like a year in because I'm not a good hirer, Dana. I wish I was. I just like people too much. I believe the best in them. I want to bring them on. And my COO was like, bro, you're terrible at this. Get out of here. We'll have you come in and do a culture check, but we're going to do the core interview so we don't get stinky people on the team. So I think I've been really blessed to be surrounded by good people. And part of my wisdom in the middle of that is just being how do I get out of my own way by not needing to do the things that I'm not going to be great at.
I can't tell you how many times I hear that from successful entrepreneurs and how many times it took for me to implement it, if I'm being honest, to where you outsource. And that I'm not necessarily talking about getting a virtual assistant. I'm just saying outsource the things that you suck at to people who don't suck at it. Get better at the things that you're good at and focus on those. So focus on the areas that you're good. Anything that you're not good at that needs to be done better, that is sucking up your time, you have somebody else do that the moment you can afford to do this. Does that sound about like a good distillation of that?
So good. I mean, I think my limiting belief, this is where I've struggled before, is I kind of operate sometimes under the delusion that, well, no one can do this thing as good as me. And that actually sometimes might be true. It might be literally something that I'm great at. But but if I can hire someone who has better attention to be paid to that thing, and they can do it like 80% as well as I can.
I knew you were going to say 80%.
Is the Dan Martell thing, right? Like that's 100% awesome. And there's a good chance that you're going to be able to find someone who actually loves to dig into it, loves to lean into those details. And so just be cognizant of those limiting beliefs that you might have that say, well, I'll never be able to hire someone to do this. You probably can. And you just got to practice the kind of discernment to know when to do that.
Yeah, cool. But also it's important that you know enough about the position to be able to manage the person, I think. So you may not be good at it, but you need to know enough to know that person's doing a good or bad job.
That's right.
Well, cool, Tyler. Thank you so much for being on the podcast. Now, everybody that's listening to this, if they don't have a solution in place, needs a service like yours. And since you're the guy sitting here, and I actually do trust the words that come out of your face when it comes to this stuff, how can people find you?
Yeah, so thank you. If you do want to level up your bookkeeping, get better analytics, understand your profitability and cash flow better, if you're feeling that, we're kind of laughing about that fetal position, visceral feeling, for cash, then selleraccountant.com is a great place to find a bunch of free resources. You can get it to our YouTube page. You can learn a lot about how to do it if you need to do it yourself. And then if you want to go ahead and reach out to us, we'd love to take over when you're ready to dump the bookkeeping headache.
Cool, man. And is there any sort of, I know we didn't talk about this ahead of time, but is there any sort of code that they need to use, or should they just go to selleraccountant.com?
Yeah, I don't have a great code here, but I just want to make this offer that if you guys are hearing about this through Danan's, show here, I would be happy to personally meet with you for free. I'm normally a $400 an hour CFO. So If you want to have 15 minutes just to hey, let's take a look at what I'm doing. I don't even want to hire a bookkeeper. I just want to have some time. Just make sure you mention Danan when you send us a message, and
let's have a mention growth, because I think people will remember growth more than they'll remember Danan.
Fair enough. Okay.
Yeah, cool. Well, that's a very generous offer. And just so everyone knows, this was not pre-planned. Like, I kind of put him on the spot here. So, thanks, Tyler. That's really generous of you. That's really awesome.
You're welcome.
All right, brother. Well, until we see each other on camera next time, huh?
Should be soon.
All right. Thanks for listening, everybody. Really appreciate it. This is the eCom Growth Show, signing off.